Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 21st. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, and even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind, everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. Although at the end of the day, we are here to teach you some different strategies you can implement into your portfolios. Please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the first day of spring. Hopefully you guys in the Midwest are starting to thaw out going forward. We're starting to see flowers here down in the Arizona area, so spring is on its way. Just keep that in mind. All right, let's talk about the overall markets across the pond. We got some economic data. Great Britain retail sales coming in at 0.4%. Those were expected to be a negative 0.4%, so a nice beat on that one. They did revise last month's number down by 0.1%, but not a major revision to affect the headline number there. And then we also got Great Britain with their official bank rate. They left it unchanged as we did. Their official bank rate is 0.75. Remember, ours is 2.5. So yesterday, our FOMC decided to leave rates unchanged. And Powell even came out and talked later on saying that we aren't going to raise rates for the rest of 2019. And with the global slowdown, Europe and China, like I've been talking about for about 6 months now, they're starting to see that slowdown and how it's affecting the United States here. So we're going to hold off. And they're even being dovish where we might even look to cut rates, they're saying, going forward. So that caused bonds to really pop. Equities love easy money. That gave some buoyancy there as well. So we'll talk about that in a minute. Crude oil did get into that 60 handle. It looks like it's there to stay now. Because we're actually starting to see some good economic data here in the United States. Like I said, with Philly Fed, we came in at 13.7, expected to be 4.6, so a nice beat there. And ADP non-farm payrolls came in slightly lower than expected, so that means we're close to full employment. So that is good for the United States. And then natural gas storage is coming at a negative 74 billion cubic feet, expected to be a negative 79 billion cubic feet. And then that's about it for the United States. Japan does get some flash PMI numbers later on today, but that's not their major number to look at. All right, crude oil, like I said, I think it's at 60s, mid to low 60s for the remainder of probably at least this month until we see some other economic data. Gold futures were rallying earlier today. Seeing a little bit of a pullback there with the equities starting to pull higher. We should not really be able to sustain a 13 handle in gold futures going forward. I think people will pull money out of there and throw it into the equities. This is what I was talking about with the bonds. They love the fact that there's going to be some easy money. Remember, and he mentioned that they may even lower interest rates going forward. Lower interest rates causes the bonds to move higher. So now with that thought process in mind, we could see bonds continue to move higher. I was expecting them to stick right here in and around the point of control because I thought we were going to basically be stuck here at 2.5% for a very long time. So, but Fed signaling possible lower interest rates causing bonds to move higher. All right, VIX coming off because we're seeing that equity rally going on. See the Dow Jones Industrial Average up over 220 points right now. Yesterday, we did see some reaction late in the day after that FOMC meeting where there was a lot of money coming into the market for the equities because of that easy money going forward. NASDAQ, another similar situation where we're blasting off to the upside, pulling through that 61.8 Fibonacci extension and going outside of the value area. Now, we could easily start seeing this whole paradigm move higher here now. And that's kind of what I'm expecting is with the new Fed enlightenment, if you will, that basically this 7,400 is going to be the area where we start really building in a volume node here for the equities. Now, E-mini S&Ps up 27 points, going above the value area high, getting overextended to the outside. But now we have some new economic data, so we could see price being accepted at these levels, and that's what I think we're going to start seeing is higher price acceptance for the equities. Now let's take a look at the E-mini S&Ps on the breakdown. This is the 30-minute candles. Each blue section is a day section. You can see yesterday on the Fed rate announcement, massive rally. We did get some longs to cover off of that move. That was right after the close, so I think those were the weak hands. Got a little bit short overnight. A lot of people talking about the recession and kind of getting a little worried about that, but today more and more information coming out with good economic data and a Fed that is usually behind the curve, right? So if we stay where we are, we could easily see the Fed wait a little too long to either lower rates or increase interest rates. I think it's probably going to be the latter, so the market is celebrating that going forward. Now, we talked about this SPY trade. Now, my overall portfolio is long delta, and I did this as a delta adjustment. Now, if we break above, what was that? Today's Thursday, Tuesday's high, I'm going to be out of this trade because it's not working out. I set it up for a technical setup. If it breaks that pattern, I'm going to be out straight away. So keep your eye out on Twitter. I haven't covered that trade yet, but we'll be looking to cover that if it continues to rally. That's all I've got for you guys, other than a webinar later on today, and it is going to be on the iron butterfly. So check that one out. It is a great strategy for a outside or a market that's going to be settling down with high implied volatility, which is kind of where we're at. And I've been talking about that for quite some time now. So these are good strategies to put on after we've seen high implied volatility and expect that to come out. And I'll show you all the rules to set that strategy up to increase your probabilities of success today. So check it out, protraderstrategies.com. That's all I got. If you can't take that, take it easy.